Hey YouTube family, welcome back. Welcome back. We're back in the building with another video. But guess what? This one is all about trading psychology. This is about your mental capacity whilst trading. Now, a lot of individuals struggle with this because oftentimes they think trading is all about having the knowledge of reading the charts, but in reality, trading is a mental game. So, this trading psychology, you've got to have it on the lockdown to be able to maximize your success within the trading space. So, without further ado, remember, I'm Kerry, and guess what? Let's get right into this video. No, trading psychology is really referring to your emotions and the mental state that dictates your success or failure within the trading space. You've got to understand that discipline and risk management are the two most critical factors that affect your trading psychology, right? If you're understanding what trading discipline is and risk management, oftentimes trading becomes easier and more successful. So you've got to understand what discipline really is and understand how to execute proper risk management on every single trade that you enter. And all of this should be intertwined within your trading plan, right? It's very critical for you to understand that your mental capacity, your emotions, they must be intact whilst you're trading, right? You cannot have them controlling you. You've got to have what we call trading intelligence, right? You've got to have the brain wired in a specific way to think like a trader and to act like a trader in every single trading position you open on your device, right? So it's very important to understand, trading psychology because it's associated with specific emotions and behavior in the trading space. And oftentimes these two main emotions are the demise, right, to your failure. They're really the driving force of failure within the trading space, and they're greed and fear. Greed and fear really, 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 and truly affect a lot of traders. Whether you recognize it or not, today really just want to help you to recognize what greed and fear really is in the trading space and how to combat these issues to become a better trader in the long run, right? If you're doing this for the long run, then you've got to understand that you can't be too greedy and you cannot be too fearful. So, with that said, greed. I know the Bible tells us a lot about greed and about the love of money, right? Often hear that the love of money is the root of all evil. It's okay to want money. It's okay to be money driven, but there comes a point in time that you've got to understand that this is enough, and if it's enough, don't crave for too much, right? It is really the excessive desire, right, to have more. That's really what greed is, the excessive desire to have more. No, as I said, more is good, but not too much. So you've got to have like a little judgment going on. You've got to have that little greed thermometer to tell you that, listen, it's time to check myself because I'm too greedy. I'm wanting too much. So it clouds your decision making. It clouds your judgment because you always want more. There's nothing that's enough, right? For you always want more. When you're too greedy, this leads to a lot of unacceptable behaviors. Now you start over trading, you start over leveraging, you start putting those big lot sizes on. You start jumping in and out of trades without a trading plan. You're doing a lot of irrational things because you want more money. Now, I understand that you may be trading because you want to pay your rent, you want to pay for your car note, you want to pay for your home mortgage, whatever it may be. But understand that the market doesn't care about your bills or responsibilities. But if you do not keep your greed emotions under control, That will allow you to have way more bills to pay with no money left in the bank. So kindly understand how to not be greedy, and this is for the long run. So think long run, because the Bible also tells you that wealth becomes easier for a man when he stacks little by little, right? Little is much when you keep stacking it. So do not get too greedy to think that, listen, there's $7 trillion in the market and I want all of it. You can't get all of it in one day, can you? Right? Can't even get a quarter of that in a day, can you? So accept that this trading space, especially if you're starting with a low capital, accept that your gains are going to be small. So not because your gains are small, it doesn't mean that you're going to be hopping in and out of the market 20 times to maximize on your gains, right? Because oftentimes, the more you open a position, the more money you will be probably losing, right? Because now you're over trading. Understand that you can take one trade for the day and be a successful trader. You can take one trade for the day and become profitable. Understand that oftentimes what happens is that after you take that first trade and you've made money, sometimes you develop overconfidence and start risking more, because guess what? You're not greedy, you want more. When you risk more, you lose everything that you've made before, plus some of your trading capital. So don't get too greedy. Understand when is enough, and take your profits and walk away, right? Because there's nothing guaranteed to you in this space. And every time you open a trading position, that's a risk that you're opening on your account. If you've made money, you can be done for the day, and tomorrow is another day for you to go again. Right? So don't get too greedy. Don't push up your lot sizes, trying to maximize on the utmost biggest profit that you can make. It's not about making the big money. It's about consistently making some profits, even if it's small and you're consistently doing over time, it adds up because of the compound interest effect, or the compound effect in general. So do not get too greedy. Um, a lot of times traders will say, how many signals you're sending in our community. They say, how many signals you're sharing for the day. They want 20, 30 signals, but you don't know that's a trap you're setting for your own self, right? If you're getting a lot of signals, it doesn't mean that you've got to take 20 signals. If you've taken a signal, even if you're copy trading, let's say, and you take a signal for the day and you've made profits with that, you don't have to go back into the market. So this is where discipline comes in, right? You're disciplining yourself to know that I've got profits already. I'm not going back into a trade. So probably your trading plan entails you having one setup for the day, and if it's a profitable setup, meaning if you've made profits, then you do not re-enter the market, because chances are you re-entering the market, you're going to give that profits back to the market, right? And we don't want to give back what the market has given to us. So we take our profits and we walk away. All right. With that said, greed, you've got to have that under control. The next emotion that drives us nuts in the market is fear. All right. It's really fear, and you've got to understand what fear is. Fear comes in different shape and form. Sometimes, as traders, we're in the trade and we close out positions prematurely, meaning that we could be up in some cents in profits or even some pence in profits, and we close because guess what? We're out of the drawdown now and we're panicking. So the little that we get, we take it, and we don't allow the market to give us the fullness of profits. And then we watch the market after we've closed with minimal profits. We watch the market go all the way toward take profit. Or it could be that you didn't even close in profits. It could be that you've closed in drawdown and you're panicking because now you're in the red and you don't want to lose your money, and you don't want to lose too much of your money. So now you close the trade in red, you close it in drawdown, and look, the market goes directly and hit your take profit. So you've literally sabotaged yourself because you're fearful. Have you done that? Let me know. Drop it in the comments down below. Remember, when it comes on to trading, I'm telling you, the markets will beat you. It will beat you. But then it's a part of the process for you to understand that, listen, this space, it can give you a lot, but you've got to go through the process of, all of these emotions and controlling them. Right? The thing about it is learning how to control the greed, learning how to control the fear, right? Feel the fear and do it anyway, but don't have too much fear to sabotage yourself, because the market really wants to give you profits oftentimes, but sometimes you're sabotaging your own success, right? So fear is a detrimental emotion that can cause you to act irrationally, right? In being hasty in the market, understanding that probably you're becoming even having anxiety attacks, you're panicking, and this generally leads to you losing your money. So you do not want to have too much fear whilst trading. You want to be stable, mentally stable. You want to be, I'm not saying you're going to be emotionless. We know you're humans, right? We know you're humans. You're going to have emotions, but do not be so attached to your money, all right? Learn to let it go. All right, learn to let it go. And if you're using proper risk management, it's easier to let go, because now you're thinking, okay, if I lose this trade, I'll lose $5 or £5 to gain £50 or $50. Now I'm feeling confident. I'm feeling, powerful, because guess what? If I win that thing, I'm making £50. If I lose it, I'm only losing five. Right? So this is calculated risk. So it kind of eliminates all that fear, because no, you're not doing too much. You're risking just what you're able to risk or willing to risk to gain something substantial. All right. So don't have too much fear in the markets. We know it can be risky, but it's calculated risk. Calculate your risk and be comfortable risking X amount to make X amount. All right. That's why your risk to reward has to be down pat, excellent. And once your risk to reward is good, oftentimes you will still be in profits even if you lose a trade or two. Now we've got the famous FOMO, which really stands for fear of missing out. Now you've got some traders who maybe they've had a lovely setup organized on their charts, but they probably went to the kitchen to wash the dishes and all of those lovely things, because life happens. By the time they come back and check the charts, they miss their entry. Market is on the way, on the way, on the way. And you know what? I'm not missing out on this one. I'm just jumping in the middle of nowhere. So, FOMO. You're fearful of missing out on that trade. You're jumping in the middle of nowhere. It's not in your plan. That entry is not your entry point, but you're violating your entire trading discipline, because guess what? You are fearful of missing out when many opportunities arise every minute on the chart. So do not be fearful of missing out. You're not missing anything. If you've missed an opportunity, that's fine. Wait on the next setup, because guess what? Chances are next 15 minutes, maybe next 20, or even less, another setup will arise for you to take advantage of in the markets. You're not missing out on anything. All right. So understand that the market provides an opportunity very frequently. Once you're able to catch that opportunity, make use of it, and don't ever feel like you're missing out on anything. All right. So, biases. When it comes on to having a bias, this can also be, very detrimental in the trading space, because some of the biases, I'm telling you, they affect your decision making process. So you want to check yourself before you wreck yourself. All right. This is really what it is. The mind is really a tricky state, and you've got to really study who you are, study how you're thinking, and be able to find what you're doing wrong and stop it in its tracks. Right? That's really one of the key things that you've got to do. So, when it comes on to developing bias in the trading space, what are the different kind of biases that actually hinder proper decision making within the trading space? Let's kind of look at these. The The first one is negativity bias, and we've got a lot of traders. I've got traders in my community who've got a lot of negativity bias, where they believe that, oh, every time I take a trade I lose, right? Every time I take a trade at XYZ time I lose, or every time I take this person's trade I lose. So you've got to first understand what negativity bias is, right? Because energy is everything. So, if you're having a lot of negative framework or a lot of negative thoughts, then most likely you're going to have negative outcomes. That's all it is, right? So, if a trader is more inclined to thinking negatively about a trade setup, then most likely their outcome is going to be mostly negative, because that's what they've been thinking, right? Whatever you think, it becomes a reality. So you've got to check yourself before you wreck yourself, because oftentimes it's our internal states that leads to our detriment or demise within the trading space. It's not the market, because the market is quite neutral, right? But oftentimes the problem that we're having is us, right? It's who you are and the things that you have been doing. They are what is causing your failure, your constant losses. And you've got to check yourself before you wreck yourself, right? So, with that said, you've got to check for negative energy, right? Do not come to the charts believing that you're going to lose. Because oftentimes you do that, you may very well lose. We know it's a probability game. We know we may lose, but it doesn't mean that we're going to think we're going to lose. Don't think you're a loser. You can't think you're a loser, or else you're going to be a loser, right? It's just simple scientific facts, right? So you've got to understand that there are individuals who believe that, okay, every time I trade GJ, I lose. Or every time I trade in the New York session, I lose. Every time I trade SMC strategy, I lose. So these are just negative biases, and you've got to kind of dismantle them so that you can have better results in the trading space. Because if you're trading US 30, other people are trading it. So it's not the pair that's the problem, it's something that you're doing. If you're trading SMC, other people are using SMC and they're making money with it. So that's telling me it's not SMC that's the problem, but it's what you're doing. Is it if you're thinking, okay, I'm trading New York session and it's not working for me, other people are trading New York session and it's working for them. So oftentimes the negative bias is really what skews our judgment, and it comes to reality because that's what we're manifesting. So be careful of what you're thinking, because oftentimes your thoughts become a reality. You only need to actually understand that. Check yourself. Yeah, do a mirror check. What are you doing wrong? Fix that. And oftentimes come to the charts with positive energy. All right, please. Next bias is what we call a gambler's fallacy. All right, we don't want to gamble the markets. We're not gamblers. We want to take calculated risk and ensure that our calculated risk provides good opportunities to make profits. So we're looking for the highest probability setup to make some money. We don't want to believe that every time this happens, we're gonna win a trade, or we're gonna take a setup only here. No, we want to be adaptable. All right. There are some traders that say the market is, consolidating. There are some traders who believe that, okay, I'm always going to buy at this level. I'm always going to sell at this level, and there's nothing else. There's nothing that will change. Come on. The market is constantly changing. So past events don't mean that future events will go the very same way as it went in the past. So understand that you've got to become adaptable. All right. Not because the market has been trending miserably, it doesn't mean that, okay, the rally is continuing. And so I'm going to be, buying, buying, buying. It must come to an end, right? Not because the stochastic is at a particular level and you said that every time the stochastic goes there, I'm going to sell. No, that's not really how it works. You've got to analyze and act according to your analysis, meaning whatever the market shows you, you take the setup in alignment with that which you see as a high probability setup. Don't develop a gambler's fallacy to just gamble the market and be skewed with your judgment to think that every time you see this, you're gonna buy, or every time you see that, you're gonna sell. Nah. Okay, so be careful of that. Next bit is our status quo bias. Very much, similar to the gambler's fallacy, where, we believe that our one strategy will always work every single time and it will reap us positive results. Even if the market is changing, we will just do the same thing. Oftentimes it works, but it means that you've got to be adaptable, because if market conditions changing, if they're changing, it means that you must have a few things that you tweak every now and again to capitalize on these changes. The danger of, an assumption that opportunities will remain the same every single day is not a good assumption, right? The market changes constantly, and for you to get a good level of profitability, you need to understand how to adapt within the markets to capitalize on profits at different, key levels and all of that. So thoroughly analyze. That's always your first step. Thoroughly analyze, and then from there, develop enough confluences so that you can execute according to those confluences. And then, of course, we've got overconfidence. So we're on this winning streak for months or for weeks, and we think we'll continue on that. And we overestimate everything, and we develop bigger lot sizes. We go in with over leveraging, because guess what? We're tough, we're bad, we're the GOAT, we are phenomenal. I know you're phenomenal, but guess what? The market will humble you. So check yourself before you wreck yourself. Understand that even if you're on a winning streak, you're gonna lose. Prepare for that. Don't develop overconfidence to think that I'm the boss, I'm the beast of this thing, I'm the GOAT, I will never lose. That is only setting you up for failure. This is a probability game. You can win and you can lose. And the quicker you accept that, you will understand how to recognize that you're not above average. You're not above anybody in the market. The market will humble you. If your this decision making is poor in the markets, oh my God, the market will humble you. Be respectful of what the market gives, because the market does what it wants when it wants. So be respectful and understand that, yeah, you may be winning, but it doesn't mean that you'll win forever. Right? Sorry to burst your bubble, but overconfident really kills a lot of traders in the trading space. And if they've been on a nice winning streak, they can lose it all like that if they haven't withdrawn or whatever, because they've developed overconfidence. You don't want to be overconfident. You want to respect the market at all times. Right? And allow the market to show you the setup. Once it presents the opportunity, then of course go all in and take that move. But don't have poor decision making in your trading because you believe that, listen, everything that I say, it always goes this way. No. There is no perfectionist within the market who wins every single day. There is no one who has 100% win rate. But just check yourself. Don't develop overconfidence, because losing is a part of the process. If you're loving this video, remember to hit that like button, and guess what? Subscribe, because this space is really where we talk a lot about empowering people with their finances. We educate you on the financial markets, and we empower you to build wealth one day at a time by investing your money and allowing your money to work for you instead of actually making money on your feet. You have the opportunity to make money on or in your sleep. So capitalize on that 100%. Hit that like button, and of course, subscribe. Now, how can we improve our trading psychology? Traders can improve their behavior in the market. Whether you believe that or not, there's this lovely behaviorism theory. I learned this while going, teachers college. BF Skinner says that every behavior can be learned, right? So even if you've been getting it wrong for years, even if you've been getting it wrong for months, you can unlearn the wrong behavior and learn the new one that will kind of attribute to your success within this trading space, because you want to be doing the right things, right? Trading is all about doing the right things, and once you do the right things, oftentimes I promise you, you will reap good rewards. So your attitude in the market determines your success or your failure. What are the behaviors that you're emitting in the market? Are you doing the right things? Are you practicing proper risk management? Are you, following the trading plan? Are you doing all of these lovely things? So, how can we improve? First of all, you've got to reflect. Because if you don't know what you're doing wrong, you can't change it. But if you do know, you have an opportunity to actually overcome these challenges and to fix the things that you've been doing wrong. So, one of the key things that I will say to you as a trader, if you've been losing miserably, you've been losing a lot of money and you don't know why, start journaling your trades. Journal your emotions. Are you having, a standard process every day you go on the markets? Are you following a certain criteria or a checklist? When you go into the markets, have you got a plan? When you go into the markets, you want to understand what you're doing. Trading is not a game of joke. It's a serious game. All right. And if you're playing the game, it's better you play it on the right side of the fence instead of on the wrong side. Because guess what? You can lose it all. If you don't know what you're doing and you're going off impulse, you're going off ego, you're going off all the wrong things, you can wreck yourself within this trading space. It's not a game of fallacy. It's not a joke, right? So you want to identify your mistakes. That's the first thing. What have I been doing wrong? Have I been, you know, taking on too much positions? Have I been over leveraging, meaning that I've been putting on big lot sizes that, my account can't contain? So I'm blowing my account. So what have I been doing incorrectly? Once you've identified the things that you've been doing incorrectly, chances are now you can take steps to resolve these and to start doing the right things. But you first have to identify what you're not doing right before you can actually fix all of that. So self reflection is paramount in the trading space so that you can reap greater results and actually have, consistent results of profits, right? Because that's the ultimate goal. You're trading to make money. So if you're doing it, do it the right way and reflect on the entire process. Journal your daily trades, journal how you feel when you're doing it, journal what risk you're taking when you do it. What were your entry criteria? What are your exit criteria? So all of this, you want to know the entire process and reflect on if you're following all of that. All right. So, as you can see, oftentimes it's the man in the mirror that first needs to be attacked because we've got internal enemies of doubt, internal enemies of fear, internal enemies of greed that kind of keeps us trapped. And oftentimes it takes us a while to see that, listen, these internal demons are fighting strong battles and we've got to overcome them. We've got to overcome these emotions and beat them while we can. Number two, practice gratitude. Now, when the market gives, you must take. That should be your philosophy in trading. Be grateful when the market gives. And I'm not saying when it gives you a cent or two, no. Halfway, even if it's halfway through your trade towards your TP, be grateful and start protecting yourself and be in that trade risk free. So whilst it's going towards your TP, you're risk free in it. And if the market gives you X amount, be satisfied and be loving of that. Come on. It didn't have to give you anything. All right. So for every profit the market provides you, express gratitude for it. Be thankful, right? Be thankful. You didn't have to make £5 a while ago. You didn't have to make £10 or whatever it is that you just made. You didn't have to make it. So learn to be grateful for every dollar or every pound that you gain in this space. Be grateful because you did not have to receive it. All right. So respect the markets, man, when the market gives you. No, this is a powerful one. And I've got a full video right here linked up top. Watch this one once you're through. Creating a trading plan. You need a plan. You need a plan. Benjamin Franklin says if you fail to plan, you plan to fail. I know you're not planning to fail. So you're going to watch this full video on how to create a trading plan. You need a blueprint. You need a blueprint so that you can be successful to this in this space, so that you can have a full process that you follow while you're setting up your entries or setting up your take profits. You need a system to follow. Once you've tabulated that full trading plan and you've got your system down pat, then you're executing according to all the factors within your plan. So if it says that your risk to reward ratio is going to be 1 to 3 and no less, then stick to that or more. Right? If it is that you say that, okay, my stop loss is only going to be 20 pips, no more, then stick to the 20 pip stop loss, no more. Right? If you say that, okay, I'm going to use my take profit, but my take profit one is going to be, okay, 50 pips, then stick to that. Whatever your plan is, stick to the plan. Right? Set profit targets that are realistic according to your key levels. Only enter a trade at either a supply or demand zone or at a specific psychological level. You're entering based on a plan. All right. So tabulate this plan for your entries, your exits, your risk. Tabulate a plan, right? Because remember, if you have a plan, oftentimes the plan will go in your favor because you've got something structured. But if you don't have anything, oh my God, you're just randomly doing things, then that's going to be very bad for you within this space. So you want to actually have a plan. When you have a plan, you won't have, the greed and the fear and all of that coming into place, because now you've got a system that you're following consistently from day to day. And once you're following that, oftentimes it will work in your favor. So watch this full video up top on how to create a trading plan. Tabulate your trading plan, work with that plan and stick with it. Come on, stick with it, man. Be disciplined enough. No. With that said, remember to like this video, hit that subscribe button, and hit that notification bell so that you're always notified each time we post a video on this space. Now, let's get right into our 10 trading tips. So, you need to develop a trading plan. And as I said, you're going to be watching the video that's coming up next on trading plan. Develop a plan, man, and follow the plan. Stick to the plan. Be disciplined enough to stick to the plan as much as you can. That's number 2. So don't just develop the plan and have the plan thrown somewhere. Number 2 is telling you to stick to the plan. Okay? No plan B, no plan C, but stick to plan A. All right? Whatever plan A says on your trading plan, stick to it to a T. Right? Dot your I's, cross your T's, and stick with it. Number 3, when the market gives, know when to take, know when to withdraw your money, man. Know when to withdraw. You can't be up £100 or $100 and you say that, listen, okay, I'm gonna go up to 2,000. Okay, no problem. You can go up to 2,000, but understand when to cash out, when to take your profits. Don't allow greed and fear to compromise your decision making. Okay, please. That's number 4. Number 5, if everything lines up with your plan, take the trade. Oftentimes we develop doubt because we don't think we are capable of doing something, or we don't believe in ourselves. So we want to understand that, listen, if all the confluences are lining up and there are check on the checklist, then we take the trade. we take it and we do what? Number 6, we practice proper risk management so that if we're winning, we win moderately. But guess what? If we're losing, we're not going to lose too much of our money because we know that our risk management plan is down to a T. Number 7, you've got to accept this fact. This is a fact. The market will do what the market wants to do. Whether you like it or not, you do not control the markets. Allow the markets to do its thing, and then you act according to what the market has, shown to you. Remember, trading is a language. Learn to interpret the language as best as you possibly can. And once you do that, you'll reap great rewards within the trading space. Number 8, this is very important. Respect your stop loss. Don't be in drawdown and move your stop loss further. Oh my God. Do not remove the stop loss entirely because that is going to wipe your account out. The only time we move our stop loss is moving it into profits. Don't move it further into drawdown. That is a debt trap to blow your money. Okay? Accept that you will lose. So if the trade is in some drawdown, don't go change your lot size because you don't want to lose. Accept that you will lose. It's a must. You must lose some money whilst trading. But if your risk to reward ratio is down pat, you would either be at break even or in profits. Right? Because you're gonna win more than you lose. That's really that's really what it's supposed to be. You're gonna win more than you lose. And have that risk to reward ratio down pat so that your risk is not more than your gains. Say you risk £5 to make 50, right? Or $5 to make 500, let's say. Okay, so you want to understand to respect your stop loss. The only time you move it is to move it closer into profits and not in drawdown, right? Accept that you will lose. It's a must. Number 9, bring positive energy. Oh my God, this one, powerful. Bring positive energy to the charts every single day. Don't allow yesterday's loss to impact today's wins. Okay? Because yesterday is gone, today's a new day. And whatever happened yesterday, let's say you've lost, it doesn't mean that it's going to affect what happens today. All right, so give yourself grace in this entire process. Be positive in every area because positive energy transmits positive results. Okay, so be positive. And the final tip, number 10, is to be patient. Patience pays in trading. And think like a winner because you are a winner. Think big, and guess what? You will win big. You are a winner. And I just want you to understand that within this trading space, there's so much opportunities to make a lot of money. But you first have to go through the process based on what you've started off with. So if you started off small, accept that your gains may be small for right now, but it is still a gain. Because if you had that money, whether it be 100 in the bank, a year later, it's still the dead $100 or £100. It's not grown much, has it? But when you come in the trading space because you're having the mindset that there's $7 trillion floating around, you want a piece, then you develop greed. So you want to be patient. Understand that it's not an overnight success. It's not microwavable success. Oh my God. But you want to follow the process and trust that it will happen for you. Right? Think like a winner because you are a winner. You're a true all-star and you've got this. You can do every single thing that you've put your mind to. You've got this. Within the trading space and even outside of the trading space, always remember to put God first in every single thing you do and honestly, the rewards will become even better. Sometimes you don't know the how, you don't know the when, you don't know all of that, but just focus on what it is that you can do. And in the long run, God will do the rest for you. All right. Accept that this is a space where it's calculated risk. So learn to calculate your risk according to everything that you do have and manage it in a proper way using risk management. Because guess what? You're going to lose, right? You're going to lose. Accept that. And the quicker you're accepting that, then the quicker you will practice proper risk management, the quicker you won't overtrade, you won't over leverage, because now you're gonna understand that this is a game of probability. You can win and you can lose. Right? So, as I said, put God first in everything you do. I do hope you found this content really helpful. If you did, drop us a like and drop a comment so that we know that, you appreciated this content. Another thing, always remember that you're one trade away from changing the whole generation. You can do this. You have been blessed with this entire trading journey for a particular reason, right? There's purpose in this. So go all in with everything you've got. Go all in, study as much as you can, and stick to the plan. You've got this. And I do hope you learn to believe in you as much as I believe in you, because I know you're a true all star and you've got this down lock to a T. I know without a doubt you can do it. So remember, perseverance in pursuit of success, because obstacles are gonna come. In this trading space, you're gonna lose. You're probably even gonna have what we call a losing streak, but it doesn't authorize you to give up on your dreams. Not because it's hard doesn't mean it's impossible. And the hardest things oftentimes reaps the best rewards. So stick to the plan, follow the entire process, and trust me, you must win because you are a winner. With that said, thank you so much for watching. Always remember, stay tuned. We'll be back real soon.